Hi, good afternoon, everyone. Thank you for joining us for today's webinar. My name is Simran and I work with Tally Solutions for the Middle East region, and I will be your host for today. As you all know, we are just a few days away from the implementation of UAE corporate tax, which has been one of the biggest news after VAT. Corporate tax on business profits will be applicable from 1st of June 2023, and most businesses will become subject to UAE corporate tax. In the recent past few days, the ministry has announced some new clarifications around this new compliance norm, and today we will be talking all about it during this webinar. Just some ground rules before we get started to ensure a flawless experience. All the participants will remain on mute throughout the session to avoid any noise disturbances. Please be informed that we are recording this session and it will be available as an on-demand webinar. I apologize in advance for any network interruptions that may occur. However, we will try our best to make this experience seamless. I'm sure you would have questions during this discussion, so please type them in the question box of your Zoom control panel and we'll bring them up towards the end. Before we proceed further, I would like to invite CA Harikishan Rankawat to set the foundation and enlighten us. CA Harikishan Rankawat is a fellow chartered accountant from India and a certified public accountant from USA. He is engaged in audit, tax practice, compliance, and auditory services in the GCC. He has got 26 years of diverse experience in various roles in multinational companies, public listed companies, and local family conglomerates in India, UAE, and Kuwait. He is currently a partner and CEO of R&G Auditors based in Business Bay, Dubai, and is also serving as the chairman of the Institute of Chartered Accountants of India, the ICAI Dubai chapter, President of the Federation of Indian Industry, Dubai, and trustee of the Rajasthan Business and Professional Group in Dubai. Mr. Rankawat is a regular speaker at various forums on tax and finance-related topics, and he has various articles in local newspapers and also has been interviewed many times on the radio. Over to you, Mr. Hari.
Sri Atul Gupta, former president of the Institute of Chartered Accountants of India, Mr. Suresh Panwar, senior partner R&G auditors, Mr. Manoj Kapoor, CEO, Taxo Online, our moderator, Ms. Simran. Ladies and gentlemen, a very good afternoon to all of you. I welcome each one of you for today's webinar on UAE corporate tax and transfer pricing. I hope you remember 090909, 9th of September 2009. Why I'm telling you, because in Dubai, I think you guys would be aware that in Dubai, Metro was launched on 9th of September 2009. And just as a coincidence, 9th of December 2022, corporate tax law was released. 9% corporate tax is the lowest in the GCC, and this is the flat corporate tax rate. And you have 9 months for filing the return, for filing your corporate tax return from the end of your financial year. So you see just a coincidence, 090909. And now, as you guys are aware, that only 4 days are the only tax-free period, after which from 1st of June 2023, UAE corporate tax will be implemented. And I think if I remember, I think Australian and New Zealand companies are having their financial starting from 1st of July. So it will be applicable on those companies. And you would have heard the news recently, which FTA has shared, that corporate tax registration has already started. So you can always consult your tax advisor and start the registration process. And recently, there was one very welcome move by FTA that they have declared a small business relief, which is like if you are having an annual turnover of up to 3 million dirhams, then you will not be charged any corporate tax, but at the end of the day, you have to register yourself for the corporate tax. You have to file your corporate tax return and then claim the relief if you are having an annual turnover of like up to 3 million dirhams. If you are an individual and you are doing any sort of business as a freelancer and you are generating an annual turnover of around 1 million, in that case, you don't have to register for corporate tax and you will be out of the scope of UAE corporate tax. One thing you have to note down that yes, corporate tax is going to be implemented from 1st of June But GAR, General Anti-Avoidance Rule, has already been implemented last year itself in December 2022 when the law was introduced. So if you are making any changes like in the enterprise structure or your company's financial year you are going to change, or you are going to increase the salary of owners or any partners or any related parties, then please be careful before you do any change. Discuss with your tax advisor, because if you are making any changes in all of these things, then you have to have solid, rational, and commercial economic decision. Otherwise, FTA will roll back or recharacterize or cancel all these changes, whatever you are making. So please be careful before you make any change. And then there are certain relief and exemptions. One of the biggest relief which FTA has given in the UAE corporate tax law, that is carry forward of losses. You can carry forward your losses for an unlimited period. I mean, there is no period like in India and all. There are like 8 years, and but in this UAE there is no period. Actually, you can carry forward your losses indefinitely, which is a welcome move. And another good move is because you know that in UAE, real estate is one of the most happening industry, and a lot of investments are coming from various countries in the country. And there are a lot of locals, UAE Emirati locals, who are owning the properties. And so real estate investment is also exempt from the corporate tax. So this is a great welcome move, and it will attract a lot of real estate investment in the country for sure going forward. And now, as you guys are aware, that there are many ministerial decisions, cabinet decisions, and FTA decisions which have been issued during the month of May. So our partner Suresh Panwar, he will be enlightening you on all those decisions. I mean, what are the reliefs and what are the updates in that regard. He will update you. And uh, all in all, I think this is the last tax-free week. So enjoy, and I wish all of you a great learning. Thank you very much. Over to you, Simran.
Thank you so much, Mr. Hari, for your wonderful words and for addressing the audience. Now it's time for us to get started with the webinar, for which we have three eminent personalities with us today who have got profound knowledge about this topic. And let me first invite and introduce each one of them. First, we have CA Atul Gupta with us, who is a staunch leader that has risen to the highest echelon of accounting profession to acquire the position of the president of the Institute of Chartered Accountants of India for the year of 2020-2021, which is the largest accounting body in the world after being its vice president in the year 2019 to 2020. He has served the accountancy profession for more than 2 decades and is widely respected for his strong organizational skills and deep insight in the affairs of his profession. He has been the first chairman of Accounting and Finance Services Sectional Committee constituted by the Bureau of Indian Standards. He has also been the member of the Government Accounting Standards Advisory Board, Insurance Regulatory and Development Authority, and SEBI's Primary Market Advisory Committee. On the international front, he's on the board of the International Federation of Accountants, XBRL International. He earlier has been the chairman of the Committee on Education, Training and CPD of SAFA, board member of SAFA, IIRC, PFC committee of CAPA. Being thoroughly conversant with the professional concerns and demands of his time, CA Gupta has authored many relevant books and has published numerous articles in leading newspapers, magazines, and professional newsletters. And he has delivered in about 1,600 seminars and conferences. Next, let me introduce CA Suresh Panwar, who is a seasoned finance professional having over 25 years of experience in strategic planning, financial control, internal and external audit, risk management, and advisory services related area, of which a considerable amount of time was with a large professional firm and senior positions leading banks in the GCC. Suresh is responsible for assurance and advisory services in R&G as an associate partner. He has actively engaged in business and professional organization and has served as the chairman of the Institute of Chartered Accountants of India, Abu Dhabi chapter during 2017 to 2018, and as a member of the executive committee for 10 years. Suresh has also served as a member of the CIMA's work group for GCC region and is currently the member of the Indian Business and Professional Group Abu Dhabi. Next, let me introduce Manoj Kapoor, who is the CEO and co-founder of Taxo. He has more than 24 years of experience under his belt and has worked with several MNC and corporate houses like Vodafone Idea, Aditya Birla Group, Airtel, Z Group, and KK Modi Group, etc. In his last corporate stint, he was heading the role of zonal business head and postpaid business head, where his responsibility was to drive top line and bottom line of the organization. He is also the associate member of ICAI since 1999. Over to you, CA Atul Gupta, CA Suresh Panwar, and Manoj Kapoor.
Thank you, Simran. And very good afternoon, ladies and gentlemen. Very respected Hariji, Chiragji, Manojji, and our very distinguished and respected chairman of the Abu Dhabi branch, the former chairman, Suresh Panwarji, and all my respected colleagues, ladies and gentlemen. At the outset, I'm thankful to the team, Tally, RNG, and Taxo for giving me this opportunity to join in this wonderful webinar, wherein I can see that there are more than 270 participants are already joined. And I believe that this session will be recorded and will be made available to other colleagues so that who could not join this live webinar, maybe they can take the benefit of this discussion whenever they are comfortable. I believe that these kind of sessions are very important because this new law is getting implemented from the 1st of June, and it will be a mutual learning for each of us. So it's not that only the speaker have the knowledge, each one of you is having the good knowledge of the subject, and together we are trying to learn the various aspects related to the subject so that it will be a better compliance from our side. Now, my dear friends, as I have to speak for around 35 minutes, 40 minutes, so let me start immediately the deliberation which we are looking for. My dear friend, as far as the transfer pricing is concerned or the arm length price is concerned, before I say, I just wish to convey you a very, very important aspect that since from the 1st of June 2023, the corporate tax is going to implement, there will be the widespread impact on the activities of the organizations for many reasons. For example, I just share you a concept of acting as a thought leader, that there will be the impact on your price and the margin because of the corporate tax. There are the obvious reasons of the same as well. As you can see, because the time is short, so I will not be touching upon that you have to adjust your arm length price. The tax losses will not be adjusted, will be adjusted to a certain extent, and then you have to carry forward the same. There will be certain expenses which not be allowed as a deduction. So practically what will happen, that your pricings and the margin will certainly require a reworking at your level once you implement the corporate tax. Then, my dear friends, the business remodeling will be again required a thought from each one of you, because you may be deciding that whether I have to go with a tax group, whether I have to go with a participative exemption, which is meaning thereby you have an international participation in the any organization from where you are getting the dividend or otherwise. Then the business restructuring, the acquisition and merger, the permanent establishment, the arm length price, all the agreements related to your related party transaction need a review, because the agreements will be subject to the arm length. As mentioned by Hariji, that the GAR principles are also there. The free zone versus mainland, the transaction between the free zone and the mainland in between. The source-based activity, what will be the source-based activity even to a free zone person, and then the related party ecosystem. All these will require a remodeling at the level of the organization. Then you require a lot of infrastructure creation. For example, you have to prepare accounting manual in case you are a large organization. You have to integrate your accounting softwares, handling the vouchers, record keeping, because there will be the audit scrutiny in the times to come. And then you have to develop the cost center or the tax group stock verification will be a new things which will emerge out in the regime in the ecosystem of the UAE. Then the third party confirmation and so on, because the audit will also be compulsory for the certain class of SSC. My dear friend, as far as the tax compliances are concerned, there will be the withholding tax provision, tax credit in case you are paying the tax in an overseas location. Exempted units will be there. There will be the audit. There will be the registration and return, which will require again a lot of introspection or the handholding from our side. Then, my dear friend, last but not the least is about the HR related aspect, that the team building, the capacity building will be required. Now, my dear friend, after this, I try to cover a few of the aspects so that we are aware that what we are going to implement and what kind of a preparation will be required at each of your level, so that there should be a smooth implementation in your organization. So all these things are there, which I just prepared as a to-do for each one of you, all the managers who are handling the corporate tax implementation, that these are certain to-dos which you should be doing while you are implementing at your own level or through the help of any tax consultant. My dear friend, now coming to the topic which is being there, that is the transfer pricing. My dear friends, why this transfer pricing is at all required? This is the first question should be there in your mind. Now, my dear friend, you are aware that when you have a, say for example, you have a profit in the X jurisdiction, wherein the tax rates are higher, and there may be a situation that you have another operation in the another jurisdiction where the tax rates are not there or tax rates are lower. So now there will be always an apprehension in the mind of the authorities that there should not be any shifting of the tax, shifting of the profit. Meaning thereby, it should not be that situation that the profit is being shifted from a location where the tax rates are lower as compared to the another location where actually the profit belongs to. And that's why there is a mechanism called the arm length price, that the transaction between the two related parties should be on an arm length price, so that whatever the computation of tax is there, that should be reasonable, fair and equitable. Number one. Number two, that to protect the right of the country, that the right of the country, that okay, what they are supposed to collect, that should be getting collected. And then the preventing the multinational enterprises from shifting profit, as I mentioned you, so that if they are manipulating the price, they are manipulating the agreement between them, so that what is happening between the intra-group transaction, that should be based on the arm length price. So, my dear friend, having looking into all these requirements that is there, that based on that only, that the price or the arm length transactions are true and fair and true, then only what will happen, that there will be the kind of a, that the ecosystem is a reasonable, fair and the equitable. Now, my dear friend, if I will move further, as I mentioned in this slide, a transaction between the two or more associated enterprises. So what I'm trying to convey you, my dear friend, whether the transaction relates to any sale, lease, any charges are being covered, there are the services are being performed, there is even the lending or the borrowing of the money is there. So in case there are the two associated enterprises are there, the two or more associated enterprises are there, and between them, there are the many transactions. The transaction may be for a tangible item, maybe for the intangible items, for example, the goodwill, the brand value, the copyright, the royalty, and so and so. Or there may be the transactions like a sale and purchase of the tangible goods. There may be the transaction in relation to the lending or the borrowing. Now, for all those transactions, whether the arm length transaction is there or not. Now, when you will be discussing, I am again and again mentioning arm length and arm length. You will have a question in your mind, what is the arm length means? What do you want to convey? So, my dear friend, what I am trying to convey you, that when I am doing certain transaction, as I mentioned you, whether the purchase, sales, whether it is a purchase, sales, transfer, lease, or anything is there, then if I am dealing, so let us assume that I have the two set of transaction. The one transaction is between A and B who are related with each other, and there is another transaction between A and C who are not related with each other. So what I am trying to convey you with this all discussion, that the transaction between the A and B should be at the par, should be at the same level which happened with the unrelated party, that is between the A and C. There should not be any undue advantage made available to the transaction between A and B, so that it will be a profit shifting, or it is trying to any kind of avoidance of tax is there. So what is happening, what I'm trying to convey you, there is a controlled transaction between A and B. There is a controlled transaction because they both are related with each other. Whereas in the same case, the transaction between A and C who are unrelated is an uncontrolled transaction. So the price which is being charged from A and C, between the A and C, should be same. This should be with the same preamble, when I'm charging from B, so that what will happen? It will be the arm length price. There will be a uncontrolled and controlled. In both the cases, the control and uncontrolled, the prices are same. So that it will be a true and fair transaction with the arm length kind calculation. So there should not be any profit shifting. There should not be any avoidance of tax or something like it that is there. So now, my dear friend, the question will come: what kind of a transaction you are talking about? So as I mentioned you, the transaction related to the purchase, sale, transfer, lease of a tangible property, meaning thereby if you are selling or buying something, or you are, for example, you are giving a vehicle on hire, you are giving a machine on hire, something like that, or even in relation to your intangible. For example, you are charging certain trademark fees, license, franchisee fees, you are marketing channel, you are charging for copyright or patent. So all those transactions should be on arm length price. So practically speaking, all business transactions should be on arm length price. Then only what will happen, that that will be that the GAR principle or any other principle will not attract. So whatever the self-assessment you are doing, that will be accepted by the authorities. Now, my dear friend, let us move further and understand these are the various transactions I mentioned you. And since maybe you are already aware what is intangible and what is tangible, so I'm skipping this aspect while we are discussing. Now, my dear friend, when we go to the article, now let us discuss with the law formation which is there in the corporate tax. So practically earlier, what was I discussing? I was discussing a basic concept. Now I'm discussing about the Article 34, which is related to your Article 34-35, which is there in the law book of your the corporate UAE corporate tax law. Now, my dear friend, as per the Article 34, the Article 34 says that a transaction or an arrangement between the related party meets the arm length standard. As I mentioned you, that if you are dealing, A is dealing with a B and A is dealing with a C as well. Now, B and A are the related person, whereas they are the unrelated person. So what they are saying, that whatever the price you are charging, that should be equivalent. That should be equivalent to this price. The preamble should be same. It should not be a case that the arrangement are consistent with the result that have been realized if the person who are not related party had engaged a similar transaction. So if I am doing the similar transaction with A and C, say for example, I am selling the 100 pens. I am selling the 100 pens to A from A and C, and the same quality pen with the same condition. If I am selling to B, who is a related person, the price, say for example, the price for this is a 10 AED. In that case, the price to B should be same. That is the 10 AED. If I will say, no, I will sell for 9 AED. In that case, this is not an arm length price and something need to be added. So if I'm selling for 9, the authorities will do 1 and practically it will reach to this 10. So it will be an addition which the FTA can do once the assessment is going on. So my dear friend, what I'm trying to convey you, that the arm length means that when you are dealing with an unrelated party, when you are dealing with a related party, the both price should be with the same preamble. Now, my dear friend, there will be the situation when the prices are not same. So there will be allegation, there will be, I will say, the apprehension, or there will be a kind of a prevention is better than cure. So that, okay, you will say, okay, let me check whether my prices are based on the arm length or not. Now, to check that whether my price is the arm length price or not, there are the various method which is being given by the OECD, and as it is accepted by all the jurisdiction including the UAE. Meaning thereby there are the methods like, for example, the comparable uncontrolled price method and the other methods which are given in the law that you have to arrive. So, for example, there was a transaction of ₹9 between the A and B. Now, how you will arrive this ₹1? Certainly, you based on certain methods. You will not do arbitrarily that, okay, you will add ₹1. No, 1 AED. No, it will not be a case that you have to derive out any of these methods that, okay, which method I will follow. And based on that, you will add this 1 AED into the price which is being charged from B, so that you will be reaching to a arm length price. Now, my dear friend, if we will discuss one by one all these methods so that you will be having the clarity that what we are discussing here. Now, my dear friend, before we discuss the arm length methods which are being given, there is a requirement to understand what is the related party means. Because I am saying the A and B are related party and A and C are not are the unrelated party. So you should have in a mind that what is related party means. What are you again and again saying the related party, related party? So my dear friend, as being given, there are the two type of person. One is a natural person and the another is a juridical person, meaning thereby the juridical person means somebody who is a registered or as a legal entity. So there is a legal entity and there is a natural person. Now, in case of a natural person, the law defines, the section 35 of the UAE corporate tax defines that in case there are the two or more natural person are related up to the fourth degree of kinship, in that case, even with a guardian or adoption, they will be called as a related person. So father and son will be a related person. And then in case you are a juridical person, a natural person and a juridical person, in that case, so it says that in case you have a control of the 50% on the others organization. So for example, the A is having a control of 60% or on B. In that case, both are related with each other. Now, how this 60% will be calculated? There are the many methodology. For example, they have the shareholding. So A is having the 60% share of B. A is having the 60% director of B. So likewise, it is a more than 50%. So in case they have the ownership interest, So it may be a case that okay, A plus, say for example, X. So both are having the ownership interest of more than 50% in B. In that case, they will be called as a related party. They control each other. So for example, A is having a control on the B for more than 50%. So there may be a situation that you are having a LLC rather than company incorporated, you may have a different type of organizations being created. But wherein you have the more than 50% of your partnership in such a way that the rights are available to A. In that case also, the A and B will be treated as a related party. Now, my dear friend, apart from that, there are many other ways that they mentioned that how the related party will be calculated. Likewise, say for example, that they directly or indirectly own more than 50%. One juridical person along with the other related party directly or control the other jurisdiction, meaning thereby A controls B and B controls C. In that case also, the A and C will be treated as a related party. There may be a situation that the A is controlling B and C. In that case also, the B and C will be treated as a related party. So all these permutation and combination has been given under section 35. So what I'm trying to convey you that, my dear friend, whenever you are having a one or the other way of a relationship between the two entities, please ensure that whether they are the related party or not. So once they are related party, it is a challenge that you have to follow. You have to follow the transfer pricing provisions which are being defined under the UAE corporate tax. Now, my dear friend, just to share with you, they have defined the control as well, that you control the more than 50% voting right, or you are having the 50% of the board of directors, and you have the you are getting the more than 50% profit, or you can influence of more than 50% of the affairs of the organization. So all these ways the controls can be defined, that okay, how you are controlling the one's other organization. So A is controlling B. So A can control the B with all these situations if he is having more than 50% of the A, B, C, D, all these things are there. Now, my dear friend, once you are through with this controlling part, that okay, whether the A and B are related party or not, let me take you to the various methods. By virtue of that, we will be calculating that the arm length price. So, my dear friend, this is again a diagram which is reflecting you that in case there is a transaction between the associated enterprises and there is an independent transaction is there. So, what is there, that this will be, say for example, an arm length price is there, and this is the price we have to achieve with. So what we have to do? We have to do certain adjustment. Let me share with you with the help of an example that okay, what I am trying to convey you by again and again. Now, my dear friend, as being given in my initial slides, there are the 5 methods which are there in the law, and even the law says that if you have other than these 5 methods, say for example, you are looking for a 6th method, which is not being prescribed, but you feel that okay, this is a good method. In that case, that permission is also there in the law. But they are saying that okay, whenever you are adopting the 6th method, any method other than these 5 methods, you have to justify that this method is also a good method. So this is the point which I wish to convey you through this diagram, so that you should be aware of that okay, what we are going to discuss. Now, my dear friend, first of all, the first method which we are going to discuss is a comparable uncontrolled price method. Meaning thereby, in a layman language, the comparable uncontrolled. So meaning thereby, if you have a price with a A to B vis-a-vis A to C, as I mentioned, you is an unrelated person. If you have the price of rupees 10 available, which is an uncontrolled transaction, and here you are charging 9, the similar kind and quality is there. In that case, it's very easy. Somebody can say that, okay, the uncontrolled price was 10. So certainly the controlled price, in case it is a controlled transaction, in that case, the price should also be 10 rupees. So what is saying, comparable uncontrolled price method is used for comparing price charge for the property or services transferred in a controlled transaction, transfer at the price charge for a comparable uncontrolled transaction. So as I did that, the uncontrolled price is 10, but where is the controlled A and between B because of the related person, if he is charging 9, then the price comparison is very easy and it is always available. And based on that, so in case there is a transaction like this, wherein that it is very easy to compare, because the point which I will be very, very important, whether you can compare both of them. So whether you can compare this with this one, because there may be the size different, there may be the quality different, there may be the situation different. So in case you can do very easily, everything is same. In that case, this method is a good method to adopt, and based on that, you can do this kind of a calculation. So now, my dear friend, just to share with you, the law says that it is a most direct and the reliable method. It is considered as the most appropriate method as well. But the problem is there that how to compare the transaction, because there will not be a similarity between the two transactions, which will be a big task, because there may be a different situation, the different quantity, there may be a different kind of I will say the quality, the color, the quantity ordered, everything. There may be the many situations which make this transaction less similar. So in case this is a similarity, it's fine. But if case it is a less similar, then this method will create a challenge because of this following reason. Now, my dear friend, if I will go that how you will do, because I simply clarified you that you have to identify the price, what you have go for an uncontrolled transaction, then adjust the price for the difference. That okay, as I mentioned you, 9 plus 1. So this is a method which is being explained. The steps I have explained you that this is the method. Now, my dear friend, let us go with the example. Now, my dear friend, in this example, what is happening? The X Limited is selling the product to Y Limited, which is a related party, and he is selling to an outsider, which is an unrelated party. Now, in this case, when he is selling to an unrelated party, the transaction price which is being charged is $6,000. Now, my dear friend, X is saying, sir, you cannot say that, okay, I should charge 6,000 from Y as well. Because what is happening that the Y is giving me the order, the bulk order. So Y is giving me the bulk order, and for normally the bulk order, I am giving a 10% discount. Okay. Or I am giving certain other discount. So no problem. So now let us do the adjustment that, okay, adjustment given to Y Limited for bulk purchase is $400. So what should be the price? What should be the price? The price should be the 5,600, whereas you have charged only the 4,000. Whereas you have charged only the 4,000 from the Y Limited, which is a controlled party, controlled transaction, you charge only the 4,000. So I will add the $1,600 into your income, because you have not entered into an arm length transaction. So between the X and Y, normally price you charge 4,000. I will add 1,600 in that, so that the arm length price will be 5,600, and that will be the transaction on which the value on which the assessment will be there in this case. So my dear friend, in case there is a clear cut comparison available, it will be very easy because the transactions are similar. They have the commonality available there. The price, everything is same. So it is very easy to follow this kind of a formula. Now, my dear friend, another method is a resale price method, meaning thereby I am manufacturing and somebody is reselling. Somebody is reselling as my customer, and now he is my sole selling agent. Now I'm giving to my sole selling agent a particular price, whereas to an unrelated party, I am giving some other price. So in that case, this method will be very useful because I can compare this situation. Now the resale price is method which compare the two gross margin, meaning thereby if I'm selling to my sole selling agent, I'm saying my profit margin will be, say for example, will be 10%. Whereas when I'm selling to a unrelated party, I'm saying my margin will be 25%. It's not allowed because you have a habit to charge 25% as a gross margin. So it should be a 25% gross margin only. So my dear friend, this method help us that it is a most. So what are the advantage of this method? Is a most appropriate method when one enterprise is produces and the another is selling. So it's like when you have a franchisee system. In that case of a franchisee system, this method is a more useful method because the reseller does not add substantially to the value. So very important to note down here, in case the A is manufacturing and as is being sold by the reseller, then this method is a very useful. But in case it is not as is, the reseller is doing a value addition, then it will not be a comparison situation because somebody will say that I added this much of a value, the another will say that I added this much of a value. So then the comparison will not be available. So it is a kind of a situation when you are selling certain goods which are ready to consume. In that case, this kind of a method is a more appropriate method. Now, my dear friend, if I go with this calculation, I shared with you the calculation method. Let us go straightway to the illustration because the paucity of the time. My dear friend, A Limited Dubai holds 60% equity share in ABC USA, meaning thereby they are the related party. A Limited purchased goods worth rupees 20 lakhs from ABC and sold to an unrelated person in India for rupees 30 lakhs. A paid 3,50,000 as custom duty for the import of goods from ABC. Normal gross profit margin is 25%. So what I'm trying to convey you that A purchases for 20 lakhs, whether you say AED or Indian rupees hardly matters, and sold for 30 lakhs. Now 3 million. Now, my dear friend, he is saying that okay, the normal profit margin for this kind of a transaction is 25%, meaning thereby my profit margin should be 7,50,000. And then there was a custom duty which I have to pay. That also I will reduce. So practically, what should be the price? That my purchase price should be. So if I'm selling for 3 million, my purchase price should be have a 1.9 million, whereas I paid 2 million while purchasing. Meaning thereby I paid certain amount extra just to shift my profit. So practically what will happen because of this kind of a situation that I'm paying 2 million for a 3 million transaction, practically my profit margin will be reduced by 100,000 here. My profit will be reduced by 100,000 here in Dubai. And by virtue of that, what will happen, or in case of a USA, that my profit gets shifted from USA to Dubai, which is a low tax regime. In that case, the authority will say, no, you shifted your profit from USA to Dubai. In that case, it is not an arm length price. So my dear friend, if you will see the answer, the resale price, which is otherwise 3 million, the profit margin is 7.5, custom duty is there, and this is the arm length price. So as which is coming, so increase in income. So practically what is happening that there is a substantial 1 lakh rupees, 100,000 addition in the purchase price, which should be 1.9 million. So this is the case, my dear friend, where we are calculating the arm length price, how it is being calculated. Now, my dear friend, the third method which is being discussed is a cost plus method. Meaning thereby, if you are selling, say for example, you are selling to associated enterprises wherein certain cost is getting added. So my dear friend, when this is a cost plus method, it determines the arm length price by adding an appropriate gross margin to an associated cost of a producing goods or service. Is applicable in case of a manufacturer or service provider engaged in the supply is a semi-finished good. So what I am trying to convey you that this method is very, very important when the A is selling the semi-finished goods, the WIP to B, so that B will do a value addition. And based on that, he will be selling to the market. So in that kind of a situation, this method will be more useful. Now, my dear friend, let us understand this method as well, that how we are trying to understand. Now, my dear friend, in case of ABC Limited Canada holds 35% share in LMN Dubai, and LMN Limited develops software and does the both on-site and off-site consultancy. Now, this case, LMN Limited during the year built ABC. Both are related with each other. Canada for 120 man hours at the rate of 1800 rupees, 800 US dollar per man hour. So for executing the work, and total cost which is being charged is 2,25,000 US dollar. But whereas the same element when charging to XYZ, they are charging 2,800 US dollar per hour, whereas they are charging with the associated prices only what 1,800 per man hour. So here is the catch. And then they are having a similar kind of a situation. Gross profit margin is 50% on its cost. Now, my dear friend, here in this case, the ABC Limited, when giving to this transaction, because there is a quantity discount, because they have asked for a bulk, there is a 10% special discount is also there in the normal gross profit. Now, my dear friend, let us understand the normal gross profit which is coming is 50%, because they are buying in quantity. They are buying in quantity. I have to give a 10% discount on the gross margin, meaning thereby I will give a 5% less. So practically speaking, my gross margin should be 45%. Now, my dear friend, cost for me is 2,25,000 US dollar, as I given you that my cost for this entire activity is 2,25,000. So what will happen? My gross margin as compared to this with this cost of 2,25,000 will come 1,01,250. And so what will happen that the arm length price on this kind of a transaction will be 3,26,250. Whereas I billed only at the rate of $1,800, that 2,16,000. So what will do? The authority will add back 1,10,250 US dollar into my income, and then they will assess in this kind of a scenario. So my dear friend, when the A is billing to be with a man hour cost, in this example, you understand, man hour cost with a specific, say for example, 1,800 US dollar, whereas as per the normal cost, the cost was 2,25,000. They should have a profit margin of 45% in case they are related with they are dealing with an unrelated party. So my dear friend, they have to say that, okay, out of this 2,25,000 cost, I have to add this 45% margin. Then only the arm length price will come. You will not say that, okay, I charge less or somebody and I charge more with somebody. My dear friend, then come to the fourth method, that is the profit split method. Now, my dear friend, the profit split method is normally being used in a joint venture. So what is happening that the A and B both are doing a joint venture and they are performing a contract. Now, my dear friend, they have a certain margin decision that, okay, whatever the cost will be there, they will bear 50-50. But what happened to shift the profit? B is in a high rate jurisdiction, whereas A is in a low rate jurisdiction. So cost they are bearing 50-50, but when the revenue came, they decided that he will have 70% and he will get 30%. So now, my dear friend, there will be a straight case when the profit has been shifted to a low tax regime, a low tax jurisdiction from a high rate jurisdiction, because they are supposed to, when they are distributing the cost equally, they should distribute the profit equally as well. So my dear friend, in this kind of a situation, when you are doing any activity as a joint venture, it will be reviewed whether you are incurring the cost and profit in a right spirit or not. So my dear friend, in this case, if you will see that there was an order being received by MM Limited, wherein they were doing the activity with a joint venture. Say for example, they are doing the joint venture with a BB Limited and ODI Limited. So there are the three organizations who are doing jointly this project. So they decided that whatever the profit revenue will come, 200,000 US dollar, that will be distributed 1,50,000 and 50,000. Whereas the cost, when the cost was discussed, it was 40, 40 and 20. So you can see here the ratio is 20-50, 25-25, whereas the cost was being shared in a 40, 40 and 20. So it's wrong. So what happened that, okay, now you have to do this calculation in case the arm length price related to BB Limited. So one of the entity, BB Limited, is, I will say, on a second part. So it will be like this. So my dear friend, when they are incurring a cost of 64,000 with a 40%, the revenue should be also being distributed in this 40% ratio. Meaning thereby, if you are getting a 2 lakh revenue, the 40% will come 80,000. Okay, the 80,000 US dollar. and the cost is 64,000 US dollar. It should be like this. The 16,000 should be the profit of a BV Limited. Whereas what they did, they mentioned the 50,000 will be the revenue minus 64,000 will be the cost. So whether this is arm length price, the answer is no. The arm length distribution, the answer is no. And by virtue of that, it will be very important that the 64,000 will be, there will be addition of 30,000 rupees in the revenue of BB Limited by virtue of this discussion. So as I given you that I just calculated and shared with you that what will be the addition in case of a arm length price calculation. Now, my dear friend, coming to the last method, that is the net margin method. This is the last method, that is the net margin method, which actually based on the appropriation of the cost sales asset of the tested party with the net profit margin in relation to an uncontrolled party. So what they are saying that in this case, we will see that what should be the net margin. In case you are dealing, the A and B dealing, what is your net margin in this transaction? And if you are dealing with an uncontrolled party, what is your net margin? That will be compared, and based on that, it will be seen that what will be the arm length price. Now, my dear friend, in this case, you see that the X is selling 20,000 unit of white bag to its wholly subsidiary unit at the outside Dubai for 200,000 US dollar, and the net profit comes is 15%. Whereas X Limited is also selling to an unrelated party, but the bag is different, the black bag, and amount is charged is 4,50,000 US dollar with a profit margin of 25%. Whereas in this case, they charge only the 15% profit margin. Now, they are saying that apart from that, if you are selling more than 30,000 unit, you will give a bulk discount of 1% as well. Okay, so in the case of a black bag, there is a profit margin of 25%. In a white bag, there is a profit margin of 15%. But in this related or unrelated, and the profit margin in black bag is 2% more. Okay, as compared to white bag. So there is a one adjustment, there is a second adjustment because of the different nature of bag. So what is there, my dear friends? So normally my profit margin is 25%. I have to add 1% because of the bulk discount I am giving to my related party, and 2% I have to reduce because the quality is different. White bag versus black bag, there is a profit margin difference of 2% margin. So practically speaking, my profit margin should be 24% because normally my profit margin is 25%. Because I am selling to a bulk related party, I will reduce my 1%. But since white bag is giving me the more profit margin, I will add this 2% into that. So meaning thereby my profit margin will be, my apology, my normal profit margin is 25%. Because I am selling this 50,000 unit of black bag, I have to give a 1% profit, 1% additional discount. So that should be, because otherwise it is not their normal situation. So that I add, and minus, because of the black bag are of a poor quality, ultimately my profit margin will come 24%. So normal 24% is my normal margin. In normal margin in this kind of a situation. Whereas in this case, I charge only the 50%, 15% as a margin. So what I have to do? I have to do a 9% adjustment. So my dear friend, as I given you that this is the case. So 1,70,000 is my cost of goods sold because I sold for 200,000 with a profit margin of 15%, meaning thereby my cost of goods sold will be with a reverse calculation 1,70,000. The net profit margin will be 24%. So what will be my new price? My new price should be the 2,23,684. So what happened? I sold for 2 lakh. Whereas I should have sold for 2,23,684. So meaning thereby in my value, the 23,684 will be added by the department by virtue of this kind of a discussion. Now, my dear friend, with this all 5 methods I shared with you, one has to calculate the arm length price as being discussed under the Article 34. Now, my dear friend, in case somebody is not accepting this method, or somebody is saying that, okay, which method I have to choose? Because there will be a question in your mind that there are the 5 methods you have shared, Atul. Now, which method I should choose? So To choose the method, the Article 34, sub-article 5 says that you have to understand the contractual terms of agreement, meaning thereby you are dealing with a reseller, then you will go with a resale price margin. In case you are selling the WIP, then you have to see the WIP method. In case you are dealing with a JV, then you have to follow the JV method. So likewise, the contractual terms and condition, the characteristic of the transaction, the economic circumstances, the function performed, and the business strategy. All you should be discussing, all you should be weighing, you should weigh, okay, that, okay, the weighing that, okay, which method is the most appropriate method, and then you should adopt the method. So how to choose? They have also given that your decision should based on all these terms and situation, terms and condition and the situation, and then you should choose that which method is the best appropriate method. Even they have given that you can choose the any other method as well, but that should be complying with the requirements which is being given here. That should be complying the situation given here. My dear friend, even the law says that whenever there will be the adjustment, if the authorities are making the adjustment, that will not be only applicable with the A and so A. So, for example, the A is income is being added. In that case, the corresponding deduction from the B income will also be there, because that will be a requirement that ultimately you shifted the profit. You shifted the profit to B. Now I am shifting back the profit to A. So that kind of a corresponding adjustment and the intimation will be there from the authorities that is being given in this kind of a situation. My dear friend, before I sign off, I have just two aspects also to discuss with all of you, that when we are discussing this arm length price and the related party transaction, the similar principle will be applicable in case of a connected person also. So my dear friend, you are aware that we have a concept called Article 36, wherein we are discussing about the connected person. Connected person, who is a connected person as being given by Hariji? That say, for example, the director. Now the director in a company is a connected person, and if, say for example, the director is having an office which is being given on rent to the company, the normal rent in that kind of a situation is, say for example, the 1 lakh AED. But the director is charging, say for example, for this transaction, the 2 lakh AED. Now in that case, whether this is an arm length price, the answer is no. So my dear friend, the law says that in this kind of a situation also, so it should not be that the A and B, the two associated entities, then only this arm length price will be there. Even with the case of a connected person also, the arm length calculation, the arm length transaction, the expenditure being incurred. So say for example, you are incurring any expenditure in relation to the owner, the director, or the related party. In that case also, the arm length price will be subject to the calculation. Now, my dear friend, before I sign off, as I mentioned you, I just wish to share with you the approach you should adopt while going for this kind of arm length calculation. So say for example, you have a two related party and you are trying to understand that, okay, what should be the right method? What should be my right pricing? In that case, what methodology you should adopt is something I'm trying to give you. So first of all, you should do a fact gathering. You should map the international transaction with an unrelated party. Okay. And then the industry analysis should be also available with you. And based on that, what the risk, asset and intangibles are there, you are going to check if something is there. And based on that, you have to appropriate the select method. So you have to see that what kind of say for example, you are selling. Okay, you are giving, you are lending to your related party. So in that case, what is the international scenario? What is the industry analysis? Say for example, the normal rate of interest is 9%. Then you have to adopt an appropriate method, select the comparable, and then do the calculate the arm length price. This is the methodology just I shared with you. And based on that, our report need to be prepared. That is the, I will say the master file and the local file you have to maintain. And so that tomorrow if the assessment will be there, you will be able to showcase that, okay, this is the international practice, this is the industry analysis, this is the comparable of 9% normally in this kind of a situation. I adopted this method because of this reason. And this is my transaction, which is on the arm length price. So my dear friend, by virtue of this, you will be able to do. So what you should do? You should do a profiling of the industry, the group, your entity, and then the associated enterprises, the profiling should be done. Then the price related, that what is the transaction terms and condition, the functional analysis, economic situation, discounts and all these things are there. the forecasting and budgeting should be there. And based on that, whatever the agreements are there, whatever the invoices are being issued, that should be calculated, reviewed for a arm length calculation. So what we should do, we should prepare a planning, a functional analysis. You should do a questionnaires, develop a questionnaire, discussion with the management. You should have the characterization of the entity and the transaction. You should have, and then you should have a comparable data. You should have the comparable data available at the global jurisdiction. Based on the principles you are following, you should analyze that comparable data and then issue the transfer pricing documentation, which is the ultimately goal that we all are discussing. So, my dear friend, just to finally sign off, as being recently there was an amendment being introduced on the 27th of April 2023, while the 97 to 2023 decision. There are the requirement to maintain the master file and the local file, and for that they have given a threshold that in case you are looking for a where the taxable person of having multinational enterprises group is there, then they should have a total consolidated group revenue. If the group revenue is more than, I will say, this much of 3 billion. If the group revenue is more than 3 billion, then you need the transfer pricing documentation. Or in case of an individual entity is there and the total revenue is more than 200 million, then only the transfer pricing is will be applicable. So that is something that we should be aware of, and then only we have to follow all the principles which I just shared with you. So, my dear friend, from my side, this was all. Thank you very much to all of you for giving me this opportunity, to the team RNG, team Taxo, and team Tally. And I believe that I try to justice with the time allotted to me. I believe that it was more or less I captured the time. I adhered with the time which is being allotted to me. Over to you, Simran.
Thank you so much, Suresh ji. Over to you, Mr. Suresh. Thank you.
Okay, thank you, Atul ji. Thank you, Hari. Thank you, Atul ji, for such a wonderful presentation on transfer pricing. And I think this has made my task a little bit difficult to come up to the standard. But anyhow, also I'll try to meet the expectations of the audience. Okay. In this my presentation, I will take. I'll take the recent ministerial decisions which were published while during the Eid last month of April. April, we all were enjoying the Eid, reduced Eid or Ramadan working hours while the ministries were busy in issuing or working on a lot of ministerial decisions, and they will come up with a number of decisions. I tried to compile some of the ministerial decisions which were issued. The first one is ministerial decision number 37, which is related to the qualifying public benefit entities, and this was issued on 7th of April 2023. I'll come to this decision, or I will try to cover most this decision later in my presentation. But this is a snapshot of the decisions which I would like to give in the beginning. The second decision is ministerial decision number 73, which is related to small business relief. And the next one is a decision number 82, which is related to determination of category of taxable persons required to prepare and maintain audited financial statements. This depends based on what is the annual turnover and what is the type of the entity where it is listed, and based on that it will be mentioned. Then the next decision is ministerial decision number 83. 83, this relates to determination of the conditions under which the presence of a natural person in the state. The state means a UAE would not create a permanent establishment for a non-resident person. That means a person who it gives the conditions where a natural person who is in the a natural person who is in the UAE but will not create a permanent establishment. And the next one is decision number 97, which mention about the requirements for maintaining transfer pricing documentation. And on this, Atulji has given complete detail about that. What are the methods of transfer pricing, and then a local master file and the local file which needs to be maintained. However, as the ministry said at this particular decision said that the ministry is going to come up with a detailed document later. The next one is ministerial decision number 105, which relates to determination of the conditions under which person may continue to be deemed as an exempt person or cease to be deemed as an exempt person from the different date. So this decision, this ministerial decision gave various terms and conditions under which a person may be treated as a exempt person, or it may be ceased to be a exempt person. Next decision is ministerial decision 114, which says accounting standard and method of the accounting being followed. It gives that which particular accounting standards needs to be followed by the entities. And next is ministerial decision number 115, which mention about the private pension fund and private social security fund. The next one is decision number 116, which is participation exemption. And the last decision, which was issued on 16th of May, is related to adjustment under the transitional rule. Now I'll try to cover some of these decisions looking towards the available time. I will cover maybe like 3 or 4 decisions, which ministerial decisions which has been available. Okay, the first one is the qualified public benefit entity. Why this decision, ministerial decision, is important, because the article number 9 of the tax law gives the definition of the qualifying public benefit entity, and it mentions certain terms and conditions. Upon fulfillment of those terms and conditions, the entity will be exempt from the corporate tax. And it gives some of the conditions which are mentioned there. I will touch base on that. And it says that it is established and operated for any of the company which is applying for this or which qualify for public benefit entity should be exclusively for a certain specific purposes, and the purposes which are mentioned is exclusively for religious, charitable, scientific, artistic, cultural, athletics, educational, healthcare, environment, humanitarian, or animal protection, or some other similar purposes. Or it can be as a professional entity, chamber of commerce, or similar entity operating exclusively to promote social welfare or public benefit. Then it says that it does not conduct a business or business activity except for such activities that are directly related to or aimed at fulfilling the purposes for which it was established. So these are, and next it says that its income or expenses are used exclusively for the furtherance of the purpose for which it was established, or for the payment of an associated necessary and reasonable expenditure. So what it means that it should do on means its income and expenses basically for the purpose for which it was established, and no part. And the next condition which is mentioned, that no part of its income or assets is payable to or otherwise available for the personal benefit of any shareholder or member or trustee or founder or settler that is not itself a qualifying public entity. So basically what it says that what are the income and expenditure which are coming at any residual income which is lying with the entity, that should not be distributed as a profit share or any other by way of any other benefit to the members or to the person who has created this, or any other condition as may be given the ministerial prescribing the decision issued by the cabinet at a later date or suggested by the minister. So for all these purposes, if these conditions are satisfied, then this become a qualifying public entity, and the tax of that entity will be exempted. Now, what is the qualifying public entity? The entity is specified in schedule annexed to this decision. So along with this decision, there is a list attached to this decision, and there are somewhere around 522 entities which has been listed in that list, and all these entities has been shown that these are the public qualifying public benefit entities, and so this is the initial list which has come along with the decision. And then what it says that this list may be updated, or the government entities shall notify the minister of any changes occurring to the public benefit entity specified in the schedule to this decision that may impact the entity's continuity in meeting the conditions as set out in the corporate tax law. So what are the conditions which has been mentioned in the corporate tax law? If any entity is not satisfying those conditions, then that may be taken out of the list. And if any new entity or any other entity which want to apply, then if the entity is satisfying the conditions, then the minister these can be added. Okay, the notification shall be in the form and manner prescribed by the ministry, and this needs to be within 2020. Okay, then the amendment to the schedule of public benefit entity, the list which has been, or the schedule which have been published along with the decision. So this can be amended. That means any entity which is mentioned in this one, that can be taken out if it's not meeting the criteria which are mentioned in the law, or if any new entity want to apply for this or want to get added in this, then that is a procedure which has been done. Okay, so what the decision says that any government entity may file an application to the ministry to suggest an amendment, whether by addition or deletion, to the schedule annexed to this decision, in the form and manner prescribed by the ministry. So the form, there will be a form, or there will be a proper guidelines which the ministry will prescribe, and in that form this needs to be applied, and whatever the required data will be there. So all those needs to be attached along with that form or the application. Then the cabinet may, at the suggestion of the minister, amend this decision and schedule annexed to it, whether by addition or deletion. So based on that application, this list may be added, means the entity may be added in the list, or if the entity is not satisfying the condition, this may be taken out. Then request for information. What it says, the qualifying public entity shall provide all the relevant information to the ministry and authority to verify that the qualifying public entity meets the requirement stipulated in the corporate law. So let's say corporate law has mentioned that these are the certain conditions which needs to be fulfilled in order to be in order for a qualified public entity. So that if any company is not meeting any information, so like the information will be requested, and if any entity is not fitting the those conditions, then it may be removed. Okay, then all government entities in the state shall fully cooperate with the ministry and the authority to provide them with all data, information, documentation related to qualifying public entity and its activities. So what all the activities this is done, that needs to be provided. Okay, the ministry and the authority may, one minute. Yeah. The ministry and the authority may, for the purpose of implementing the provision of decision, exchange with each other information and documents in respect of qualifying entity and its activities. So what ministry and the authority, they will exchange the data so that they can monitor the activities, what all the activities which are being done by these qualifying entities. Now, this is I have just summarized the list of the how many qualifying entities are there in. There are 198 entities which are at the federal level. Then in Abu Dhabi, 95 entities. In Dubai, there are 53 entities which have been listed in this list. then Sharjah 94. So total is 521 entities which have been listed in this schedule. Now, some of the examples means what are these entities? Or so in federal level, I have just given an example of in two entities which are listed in this schedule. One is Indian Islamic Center Association and Kerala Social Center. Then similarly in Abu Dhabi, there are quite a few names which we all must be knowing. The Indian Ladies Association, then BAPS Hindu Mandir Temple, Indian ISC, Indian Social and Cultural Center. Then similarly, there are quite a few other entities which are listed in this schedule. So, okay. Yeah, the next one is the next ministerial decision which I am going to take is the ministerial decision number 73. This was issued on April 3rd, 2023, and this relates to small business relief. Okay, there are certain conditions which needs to be fulfilled in order to be qualified as a small business. Qualified for the small business relief. So the first condition we mentioned that the taxable person's revenue threshold for the relevant tax period and the previous tax period shall be 3 million. Means the revenue or the revenue of the taxable entity should not be more than 3 million for each of these two tax periods, which is the current tax period, relevant tax period, and the previous tax period. Okay. Now, what it also says that the threshold set out in clause 1, this clause shall apply to tax periods commencing on or after 1st June 2023. That this is the date when the corporate tax is going to come into effect, and such threshold shall only continue to apply to the subsequent tax periods that end before or on 30th December 2023. So if I look into, means if I interpret in the different way, then what I can see that the small business relief is expected to be applied only for 2 years, which is a first year. Let's say if any entity is having a financial year starting from 1st June, which is also the date when the corporate tax is going into the picture, coming into the picture. So first year it will be 1st June 2023 to 30th May 2024, and second 1st June 2024 to 31st May 2025. So 24 and 25. So this will be applicable only for 2 years. And the entities which are using, let's say, financial year starting from 1st January. So the first year will be 1st January 2024 to 31st December 2024, and 1st January 2025 to 31st December 25. And the next one, your taxable person shall not be able to elect to apply the small business relief if the revenue of any relevant or previous year has exceeded the threshold set out in clause 1. So let's say if the revenue exceeds the 3 million threshold, which is mentioned in the clause 1, then the entity will not be able to claim or will not be able to apply for the small business relief. So that is 3 million is the ceiling. Then the revenue for the purpose of this article shall be determined in accordance with the applicable accounting standards. So whatever the revenue which has been calculated for this purpose, or will be shown for the tax purpose, will be as per the applicable accounting standard, which we will come later on. Okay. Now, so this is the first condition, which is a 3 million. Now, in addition to that, there are 2 additional conditions which has been mentioned, that the resident person that elect to apply for a small business relief must not be any of the following. So that means the person or the company which is going to apply for the small business relief, that should be first condition. It should be revenue should be less than 3 million. Then these 2 conditions, which is a constituent company of a multinational enterprise group, means it should not be part of a multinational enterprise. Maybe a company which is let's say listed in US and having a subsidiary or a branch in UAE. So the UAE branch cannot apply for uh, uh, a relief under the small business relief because it's part of a multinational enterprise. And second is the qualifying free zone person. If a company which is registered in a free zone, then it cannot apply. Now, so these are the conditions. After that, what will be the relief or the provisions related to the tax relief? Where an election to apply for a small business relief is made in a tax period, any tax losses incurred in such period cannot be carried forward to any subsequent period. Let's say if a company has applied for the small business relief and it has incurred losses. So any tax losses which were there, it cannot be carried forward. Okay, and the second, any unutilized tax losses incurred in the previous tax periods where the election to apply the small business relief was not made, may be carried forward to subsequent tax period in which an election to apply for a small business relief is not made. That means if any unutilized tax losses are there, which are coming from the previous year, where the entity has not applied for a small business relief, then they can be carried forward to subsequent tax periods. And which tax periods? In which an election to apply for a small business relief is not made. So if an election for a small business relief has been made, no, these will not be available. So wherever the application has not been made, there you can take the relief. Okay, now the same rule apply for the general interest deduction limitation rule. So where an election to apply the small business relief is made in a tax period, any net interest expenditure incurred in such tax period cannot be carried forward to any subsequent period. That means if you apply for a small business relief and there is a net interest loss, so that cannot be carried forward. But any interest expenditure incurred in the previous tax periods where the election to apply for a small business relief was not made may be carried forward to subsequent tax periods in which an election to apply for a small business relief is not made. So these are the related to the interest deduction rule. Now, artificial separation of business. What happens, like sometimes it may happen that in order to take the benefit of small business relief, the companies may segregate or the company may segregate it into different parts so that the advantage of a small business relief may be available. So there is a specific provision which had been given in this ministerial decision. What it says that where the authority establishes that one or more person have artificially separated their business or business activity and the amount of revenue across the persons sorry for the interruption. Where the authority established that one or more persons have artificially separated their business or business activity and the amount of revenue across the business person's entire business or business activity exceed threshold under clause 1. Clause 1 is 3 million. In any tax period and such one or more person have elected to apply for a small business relief, this would be considered an arrangement to obtain a corporate tax advantage. As I mentioned that if they separate and one of the entity or both the entity or the entity which are getting separated, they apply for their individually turnover is less than 3 million and they want to apply for the small business relief. So this will be advantageous, means that they want to take they are doing this just to take the benefit of the small business relief. So that is not permissible. Okay, and then for the purpose of determining whether the business or business activity has been artificially separated, the authority shall consider whether the arrangement was undertaken for a valid commercial purpose, Means if the separation of the entity into different parts is for a valid commercial purpose, so authority will see, and whether the person carry on substantially the same business or activity by taking into account the relevant facts and circumstances. So authority will see whether this is for this separation has been done for the valid regions, or this has been done for the valid commercial region. And when they look into that, they take into consideration the financial, economic, and organizational links, etc. All those things. Yeah. Now the next which I'll take is the ministerial decision number 82. This is a requirement to prepare and maintain audited financial statements. So it's a very straightforward and very short and sweet thing. It says that the taxable person deriving revenue exceeds 50 million during the relevant tax period. So if any organization is having a revenue exceeding 50 million, then he has to prepare and get the accounts audited by a qualified audit firm, and a qualifying free zone person. So any taxable person deriving revenue exceeding 50 million has to get the accounts audited, and a qualifying free zone entity has to get the accounts audited. Now, different qualifying free zone entity, free zones have different rules, so those also needs to be kept in mind. Now, the next one I'll take is accounting standards and methods. Okay, this is given in the ministerial decision number 114 and issued on 9th of May 2023. So first of all, what the financial statement should consist. So it says that financial statement includes, but it says it not limited to. So financial statement includes statement of income, statement of comprehensive income, balance sheet, statement of changes in equity and cash flow, and related accounting policies, notes to the accounts, and all those things. Okay. Now, second, it also defines about the cash basis of accounting. So what is the cash basis of accounting? Is a method under which the taxable person recognizes income and expenditure when the cash is received or paid. So these two terms have been defined in this ministerial decision, and it says that preparing the financial statement using the cash basis of accounting, that when an entity can prepare the accounts based on the cash method, that means record the transactions when cash is received or cash is paid. Okay, so it says that a person may prepare financial statements using the cash basis of accounting in any of the following instances where the person derives revenue that does not exceed 3 million. That means if the revenue is less than 3 million, then a taxable person may choose to prepare the financials based on the cash basis of accounting, or in exceptional circumstances and pursuant to an application submitted by the person to the authority. So these are the two circumstances. And now it says financial statement, what the financial statement should consist. That means for which all entities the financial statement should be provided, should be prepared. And when the financial statements are prepared, what it should include, or which all entities should be consolidated. So it mentioned that consolidated financial statement of a tax group shall mean the preparation of standalone financial statements on the basis of aggregate of the standalone financial statement of the parents and each subsidiary that is a member of the tax group, eliminating the transactions between them. So let's say a group of company which has formed a tax group. Let's say in a group there are 3 companies, and 2 companies are forming a tax group. So one is a parent, another one is a subsidiary, and third company is also a subsidiary. Let's say A is a parent, B is a subsidiary, and C is also a subsidiary. But for tax purposes, they want to form a tax group between A and B only. So the financial statement which are required to be prepared for this tax group is a financial statements of the parent, which is company A, and financial statements of company B, which is a subsidiary and a part of the tax group. So these two needs to be prepared. Even though for IFRS purposes, the financial statement of other subsidiary, which is subsidiary C, that may also be required to prepare. But for tax purposes, the entity has to prepare the separate financial statements, which are for the tax purposes for the group parent A and B. Now, what are the accounting standards while preparing the financial statements? Which accounting standard needs to be kept or under should be followed? So this ministerial decision states that a taxable person shall apply the International Financial Reporting Standard (IFRS). So let's say if an entity is following US GAAP for some of the transactions, then probably it's like he has to move to IFRS, because it mentioned that the financial statement needs to be prepared by applying the International Financial Reporting Standards. However, a taxable person deriving revenue that does not exceed 50 million may apply International Financial Reporting Standards for small and medium-sized entities. So if the turnover or the revenue is not exceeding 50 million, means less than 50 million, so the entity may follow the IFRS for small SMEs. Okay. And then next is the ministerial decision number 97, which I think Atul has discussed in a great detail. So as in the interest of time, I think I have taken more than the time allotted for me. So I will just stop it here. And thanks a lot for listening. Over to you, Chirag.
Thank you, Suresh sir, for enlightening us. Next speaker is Mr. Manoj Kapoor. Over to you, sir.
Yeah, hello friends. I am Manoj Kapoor, co-founder and CEO of Taxo, and welcome all of you to today's webinar. And believe that all of us learned a lot from our esteemed speakers. And Taxo extends special thanks to our keynote speaker, C. Atul Gupta ji, for wonderful deliberation on transfer pricing, and CA Suresh Panwar ji for keeping us updated on the recent changes in the UAE corporate tax. As all of you are aware that the big day, 1st June, is also approaching in the next 4 days, as mentioned by Hari Bhai. And the problem for most of us is that from where we get all the updated knowledge on a single platform, along with the best practices from across the globe. So here, Taxo is come up with a smart digital knowledge solution that provide you with real-time basis updated UAE corporate tax on a single platform. Taxo UAE corporate tax is now not a repository. It is a true solution in many senses, which fulfill all your needs, from self-paced learning to interaction with the experts and the ask queries options. Now I will start my small presentation and give you a brief about the Taxo and our smart knowledge solution on UAE corporate tax. Yes, friends, Taxo is one of the most advanced e-knowledge solution, and which already servicing the lots of tax professionals worldwide and multiple industries across the world. And Taxo goal is to deliver superior value to our subscriber by offering a high quality tax knowledge solution in a cost effective manner. We save valuable time and energy searching for the tax solution resources. That's our main motive. And our team of 50 plus professionals has developed a high quality tax knowledge e-solution with a penalty of resources, including analytical reviews, illustration, FAQs, which are constantly being updated for the any revision. And these are our some esteemed subscriber base. And I already mentioned that we already served the more than 100 corporate customers, and more than 14,000 individual subscriber we already have. And now let's discuss about the challenges of the traditional tax solutions has. One biggest challenge is that in the market, there are lots of solutions are already exist, but no solution in the market. Every solution in the market is merely providing you the text, like text of the articles, regulation, case laws, and amendment on a standalone basis. but fail to provide the interconnectivity. Lack of research behind the abundant availability of the text resources, hence users are lost in the existing solutions. Lack of illustration, case studies, flowchart, FAQ, these are the challenges. Online help is not available. If you want to discuss and you want to resolve that any text doubt, then there is a no platform. And topic specific search utility is also not available. So there is a lots of wastage of time. And absence of the workshops. Regular workshops is the also be the absence, and non-availability of the daily updates. And these are the basics, some challenges, which are the, excuse, 1 minute. And what you get in the Taxo. Taxo gives you the clear understanding of the text scenario by providing a connection between the articles, regulation, amendment, and the case laws. Research-based content. We have the already in-house team of the more than 50%, 50 plus professional. So you get the all the research-based content, and the everything be get updated into the these solutions. Text topics are backed with the illustration, case studies, and flowchart for an easy understanding of the complex text issues. Commentary on the all complex key text topics from the over eminent text experts. Monthly workshops to discuss the impact of the latest text amendments or the judgments. Real-time basis update on various text laws, regulation, and amendment through the emails and the social media channels like WhatsApp, etc. These are the some facilities we will extend to the our subscriber, and 24 hours on 20 or on the basis of 24 hours you get the updated materials. And topic wise, search utility is here, which is the excellent feature to you get the quicker answer, and you have to avoid the your value. You have to avoid and save the your time. Transfer pricing info base from the global jurisdiction, which provide a guidance in the analyzing the transfer pricing implication and helps in avoiding interest penalty and unnecessary litigation. Ease of assessing help to resolve your minor tax doubts and query. Subscriber can connect with our team to the tax experts through multiple channels like online chat, email, phone, WhatsApp. Environment-friendly solution, providing the exceptional value for the money through a complete and most advanced tax knowledge platforms. And important thing is that this solution is also available in the multilingual language like Arabic. Within few seconds, you can got translated the complete solution into the your preferred language. This is the product synopsis. All 20 chapters you can got at a single page, and for the every chapter and for every article you get a complete booklet at a one place. I show you the how. Like there is the chapter number 10 and there is the article number 34, and all the content of this article you find at a one place, being an article or regulation, flowchart, case laws, FAQs, case studies, relevant notification circulars. When you go further, when you start reading the article relevant regulations, you find the each and everything be available, and you can see the right hand side on the top corner. You also find the links where you find the flowchart, case laws, FAQs, case scenarios, and the notification circular. You can go click here and you go to the at a particular things like a flowchart. Every article is supported by the flowchart, detailed, and the very comprehensive flowcharts are available. Case laws, and this is the beauty of the product. You are getting the case laws from the global jurisdiction is the milestone or the most relevant judgment we are provided, which we the definitely research by the our in-house team and for the your pursual. And the FAQs, whatever we FAQs issued by the department or with the authorities in the UAE, we are also providing you in, as it is in the, and with the relevant links. Case scenarios. Beauty of the product is that now is the time for the practicals. From the first of June, we have to do the work as on the practical basis. So there's the hundreds of examples, hundred of illustration we are provided. So you get the updated knowledge. And the relevant notification circular. Whenever any notification circular will come within 24 working hours, we get it updated into the solutions, and also we provide you this solution into the relevant articles. And this is the beauty of the product. Like UAE, the Arabic nations, and lots of people will prefer instead of English. So there is the in the right hand side corner you can see there is the option for the language selection. You can select the Arabic, and within few seconds, complete site got translated into the Arabic. And that's the additional feature. After the self-paced learning, we are giving you the uh, opportunity to interact with the expert with the 12 monthly webinars, where every month to our subscriber they met with the expert, they can resolve their queries, and they get the proper answer. Other than this, if they have any query, any question, they can ask us, and this complete solution is available to all of us. Right now we at the 275 USD, and against the original price of the 400 USD. And these are the our contact number and our website. And I can request, if anybody is looking for the solution, he can connect with us and ask the question. So friend, I just repeating, Taxo UAE Corporate Tax Smart Knowledge Solution help you in more empowerment and equip your tax team to ensure more efficiency in the compliances. It is a very simple, easy to use knowledge solution which give you always updated information. In fact, you can access this information anywhere, anytime. And this is a cloud-based application, so no download, no installation. And top of it is the pricing is so economical at the rate of the USD 275 against the original price. This is the limited time offer. And if you want to access this application, and you can log into the our website www.taxo.online, and you can also connect with us. Our number is also our Indian number. Our Dubai number is also mentioned in front of the screen. You can talk to us, you can WhatsApp us, you can email us. Email also mentioned here, and we give you the services as per the your need. And once again, I think any query you can ask me, sir, in the chat box, or I will answer in the last. And once again, thanks to the all participants and the speaker for the wonderful session today. And now over to Shimran and Chiragji to take it forward.
Thank you so much,
Thank-
Manojji. Yes, Imran. Sorry.
Thank you so much. With this, we have come to the end of all our presentations. However, we see that a lot of people have a lot of questions in the Q&A panel. So I would request all the panelists, all our speakers to come on camera to answer any questions that are being posted in the panel, in the Q&A box, and see if we can answer the queries of our audience. So if anyone can just choose
Simran,
what question
yeah,
you want to answer.
Yeah, Simranji, I am just taking the questions which are related to the related party.
Sure.
I believe that Chiragji has already answered more than 59 questions through the like I just mentioning on the answer on the this Q&A box. But there are 15 open questions are there. One question is there from Suresh ji. Can we give interest profit rate for related party investment? What maximum interest can be given? Suresh ji, as I explained you, it is not the thumb rule that, okay, this much of interest you have to give to be an arm length price. It will be a comparable. So in a similar kind of a situation, if somebody is giving a loan, for example, a normal banking rate of interest is, say, for example, is 8%. Whereas you are giving a loan to a related party at the rate of 4%, then that is not an arm length price. So you have to compare the normal situation. If you are getting this money, at what rate you should get. So that will be the arm length price. So there is no thumb rule that, okay, this will be the rate of interest, then it will be falling. It will be a compliant kind of a situation. Then we have a question from Sanjay ji, that does TP rules applicable to related party located in UAE? The answer is yes. So it is not the case that in case there are the two related parties within the UAE or outside the UAE. Even if it is a connected person, then also the arm length price provisions are applicable. So please note down this aspect that, okay, we are discussing about any kind of a related party transaction, not only with this kind of arm, because there may be a situation that you have a free trade zone party, you have a small SSC getting the small relief. So there may be the different situation. So transfer pricing is applicable or the connected person provisions are applicable even in the UAE as well. Then there is another question. I believe the Pankaj is typing the answer for this question, so I should not be taking. The next question is, if some same item having different price to different customer in same region, how will decide the arm length price? You are right, as I mentioned you, that there may be the challenges in this kind of a situation. But again, if the normal business practice, say, for example, you are dealing with a 3%, one person related party, you are selling a pen for 4 AED, whereas to an unrelated person, you are selling for 5 AED and the 6 AED or the 3 AED or something like that. In that case, kind of a scenario, you have to see the very similar to the situation. For example, you are selling in a bulk customer, you are selling to a particular quality, then you have to see that normally what you will sell. So in case of a normal situation, you are selling at $4 also, for AED as well, 5 AED as well. Then you are, when you are dealing with a related party, then that should be the base for the same. So it's not a case that, okay, you have to have a completely compact tight department, something like that is there. Then we have another question. If the poem is outside UAE, then then it will be treated as a foreign company. The answer is yes, for a limited purpose. As you are aware, that the place of effective management. So if the place of effective management is outside the UAE, certainly that the jurisdiction of that entity will be falling outside UAE. But that is only for a limited year, say for example, for that year only, when the poem will be reviewed. So the poem has a uniqueness that every year you have to review the poem. This is one aspect. Number two, even if it is a foreign company, then also the transfer pricing provision will be applicable. So please, I just remind you again and again that it's not a case that, okay, the poem, even if the poem is falling, poem is saying that this is a foreign entity, then the transfer pricing will not be applicable. It's not. It will be applicable still in that case. The question is, we have a registered company in Dubai, but revenues are coming from overseas client. Not have any revenue in Dubai. On top of that, few revenue are generated from related party, which is also located outside the Dubai. So in this case, arm's length price is applicable. The answer is yes. So since you have a related party transaction which is located outside Dubai and you are getting generated the revenue from there, it will be the arm's length price provisions will be applicable. And when we are talking about the master file and a local file, all the turnover of SSC will be calculated and will be consolidated, aggregated to check that threshold aspect which is being discussed. Then we have a question coming from, let me take any other question which is related to the arm's length price. I believe that Chiragji, I answered all the related party this transfer pricing questions.
Yes, Atulji, most of the questions you have answered. Some questions are still remaining. I will take a few. In interest of time, sorry, we cannot take all the questions. Like one question is by Nishita Salim, asking what is the rule for free zone and what are the exemption. So, the corporate law defines about qualifying free zone, and qualifying free zone, deriving qualifying free zone income will be subject to 0% corporate tax. However, the registration is mandatory. So qualifying free zone person, in order to qualify, there are certain rules, like the income should be either from the free zone or from outside UAE. There is proper substance in the company, like there are proper operating expenditure. Number two. Number three, there is audited financial statements for each tax period. Then only you can qualify as a qualified free zone person and you can claim the benefit of 0% tax. Another question is raised by Mohammed Aslam, is asking for the corporate taxable amount. So corporate taxable amount is 375,000 dirham. If the profit is more than that, then we have to pay tax at the rate of 9%. One more question is by Even, for the branch of foreign company. Yes, since the branch is based in UAE, so the branch has to register under corporate tax. Many participants have asked us the question about sharing of the presentation and the recording. Yes, so we will be sharing the presentation to all the registered participants on their email IDs, and this recording would be shortly uploaded on our YouTube channel. Subscribe to our YouTube channel. So as and when it is uploaded, you will automatically get an update. Regarding the corporate tax registration question from Mr. Gopinath, yes, it is compulsory for all. There is no deadline. Even if you register before the end of the taxable return due date, there is no penalty and there is no turnover. Even if zero turnover or a startup company, the loss company, all the company have to compulsory register under corporate tax. There are further few questions, but I think in the interest of time, we would like to end this session. And unanswered questions, we will try to take it up and reply individually to them over email. So this is all from our side, and thank you so much to our esteemed speakers for the day and Ms. Simran for moderating the session.